A massive $120 billion financial glut is quietly fracturing the core architecture of artificial intelligence enterprise markets. Venture capital syndicates are discovering that over-leveraged cloud compute leasing platforms are entering immediate insolvency, causing multi-billion-dollar portfolios of premium silicon hardware to look completely illiquid. This isn't a speculative software valuation bubble. This is a brutal physical inventory liquidation. Emerging tech infrastructure providers who borrowed hundreds of millions to hoard advanced graphics hardware are defaulting on their institutional loans as enterprise customer churn pushes operations into structural insolvency. The breakdown stems from an extreme overproduction of artificial intelligence hardware leasing operations. Over the past 24 months, global investment funds rushed to finance specialized AI cloud platforms, backing startups whose only business strategy was to buy thousands of elite chips and rent them out at high margins. But as major enterprise companies shifted away from expensive experimental pilots and began optimizing their internal hardware structures, the market demand for outsourced third-party compute collapsed. Cloud leasing startups are now trapped with massive depreciating physical hardware assets that they cannot rent out and immense debt payments that they cannot service. This sudden drop in operational leasing revenue has triggered a massive fire sale across secondary market infrastructure exchanges. Debt registries confirm that distressed cloud startups are quietly liquidating their chip reserves, attempting to dump millions of dollars of premium hardware back into a saturated open market. But because global cloud networks are already oversupplied, the market price for computational leases has plummeted by nearly 60% this quarter. Institutional lenders are moving in, seizing massive silicon server arrays and auctioning off distressed tech infrastructure for pennies on the dollar, leaving venture-backer portfolios completely wiped out. The sudden collapse of the specialized compute leasing landscape is forcing a deep structural realignment across the venture capital landscape. Institutional investors are completely freezing unhedged hardware pipelines, refusing to fund any tech operation built on short-term leasing assumptions. The era of unchecked artificial intelligence hardware hoarding is officially over, and a highly restricted cash flow-driven capital winter has permanently taken its place.